So the market just pulled a massive 180 and has now given up all of the gains it got yesterday from Jerome Powell's press conference following the FOMC meeting. Well, folks, I said yesterday during my live stream what Jerome Powell said at the FOMC yesterday was not that dovish. There was one little dovish thing he said, that they weren't considering a 75 basis point rate hike. Literally everything else Powell said and forecast yesterday was very hawkish and restrictive for the economy. So I put this out on Twitter yesterday when I said the only remotely dovish thing I heard from Powell today was that the committee wasn't actively considering a 75 basis point rate hike. Literally everything else he said was hawkish. This rally doesn't pass the sniff test. And folks, there's a couple of things you hear repeated very often on this channel, and one of those is the sniff test. And it's very basic, all right? If you go in your refrigerator, you pull out some food that's been in there for a while, you open it up, and if you smell it and it stinks, don't eat it. And that's why I don't trade rallies like this when there's this big move basically off of nothing said by Jerome Powell. You could have predicted that this move was going to reverse because there really was nothing dovish about Powell's press conference yesterday, just that one little talking point about the 75 basis point rate hike. And look, this isn't financial advice. I'm not a financial advisor, all that CYMA stuff. But there's another thing you hear me say very often on this channel, and that is not to trade against the algorithms. During big market events like a CPI release, like a GDP number, or like a Jerome Powell press conference, that is not a good idea to try to day trade these moves because you've got these computer algorithms that are trading billions of dollars back and forth 1,000 times a second. And you and me don't have the firepower to keep up with algorithms like that. If you try to get involved in that mess, you're going to get steamrolled. And I've always said my strategy has been put my trades in place and then sit back, hands off, and watch the situation play out, not get caught up in moment-to-moment swings. If you had seen that rally yesterday and you panicked and you tried to trade that, then today you are wiped out, folks. That's why I always say I like to sit back and relax and just leave my trades in play and wait for the algorithms to beat each other over the head, find out where the market is going to settle, and then adapt your strategy from there. And what does that look like? Well, let's shrink my big fat melon of a head and take a look at some of these charts. And we're going to have to put me down here because this is the U.S. 10-year Treasury. And here is that big buy in Treasury bonds yesterday off of the supposedly dovish Powell comment about no 75 basis point rate hike. Now, if you went and piled into bonds down here, guess what? Today, you got cleaned out because the market opened today and wham, up went yields. And they're still ticking higher. We're now at 3.04% on the U.S. 10-year Treasury. Again, the market, or at least the algorithms, initially thought that was very dovish of Powell. Then they had time to come to their senses, and back up go yields. And the stock indexes are doing the same thing. Look at this chart of the S&P 500. If you had bought this rally yesterday, say you saw this and you went out on margin and you piled into SPY, well, guess what? Today you're getting margin called because the S&P has now given up all of those gains. And by the way, I got to send a shout out to my moderator, Mish, because we were talking yesterday after we saw this run up, and he said, Jack, it looks like we're setting up for the mother of all rug pulls. It seems like retail is being lured into this market and that something is going to happen and they're all going to get cleaned out. Well, Mish, that is exactly what happened. Nice call, brother. Moving on to the Dow, same thing in the Dow. We've given up all of those gains, now right back where we started. And of course, the NASDAQ, the same thing. NASDAQ's actually below where we started. So markets, after having a few hours to digest this information from Powell, have now realized, yeah, that wasn't the dovish press conference that CNBC was talking about. Jerome Powell didn't thread the needle and walk the fine line perfectly. No, he came out and said, we are going to tighten the noose on the economy and it's not going to be good. That's what he basically said. He used flashy, wishy-washy, in some cases outright BS language to do it. But if you took time and you didn't trade on emotion, you would have seen that coming. And here is the VIX, the CBOE Volatility Index. A lot of you have been trading this one lately, and this is basically the same thing. We have now recovered all of those losses from yesterday and then some. The VIX is now pushing over 30. By the time this video goes out, who knows where it's going to be. So again, folks, I have to reiterate, not financial advice, not a financial advisor, all that CYMA stuff, but I have these two recurring themes that you're going to hear over and over again on this channel. Number one is the sniff test, all right? If it smells bad, don't eat it. And I use that same application when it comes to my trading. If I see something happening in the market and it makes no sense, I don't chase and FOMO into that rally because it's fake. Yesterday's rally was fake. And the other recurring theme you hear a lot on this channel is don't get involved during these big market events when the algorithms are swinging back and forth massive amounts of money 1,000 times a second. I can't keep up with that. I don't have the money or the reaction time to be able to keep up with that effectively, and so I don't even try. I put my trades in place, and then I step back and I let the scenario play out, and then after a few hours or even a few days, I adapt my strategy accordingly. So where do we go from here? In my opinion, markets are heading lower, far lower from here. There was no good news yesterday. The fact that Powell isn't going to hike 75 basis points a month from now does not change the macroeconomic picture. It doesn't change the inflationary environment. It doesn't change the strong dollar, which is going to hurt U.S. earnings. It doesn't change the fact that the earnings season has been abysmal so far, that we have a debt crisis in this economy. So literally nothing has changed since yesterday. And in my opinion, markets are heading lower from here. And it's not just stocks and bonds. We're seeing the same thing in housing. And if you want to know more about that, you can check out this video I did with the Economic Ninja a couple days ago about the residential housing market. Till next time, live small and dream big.